Benchmark, the voice of business. Presented by LMD.
On this edition of Benchmark, in the hot seat is Dinesh Fernandopulle, the Managing Director and CEO of Synapsis, to give us his take on Sri Lanka's investment prospects. Then we discuss investor sentiment and market performance with LMD columnist Hasda Premaratna. And we wrap up the show with Nirupti Karyavasan, product lead of Frontier Research, who explains the importance of having a fuel price formula. That's the lineup for Benchmark.
Hello and welcome to the Big Picture Business Program, Benchmark. I'm Savitri Rodrigo. Our focus today is Sri Lanka's investment climate, the topic that has been generating a lot of discussion and debate recently. In our studios today, we are delighted to have Dinesh Fernandopulle, the Managing Director and CEO of Synapsis, and he will give us his take on the investment climate in the country. Dinesh, good to have you on the show.
Thank you for having me here, Savitri.
Just to start off, and we are looking overall at the investment climate, what is your assessment at this point?
Right, so I'm from the financial technology space of the overall financial sector. And so just like the investment climate, there's a specific vertical called the fintech vertical that's been attracting a lot of attention lately. You would have heard about Dialog acquiring a finance company, and in that manner, telco getting into the space. So we have similar situations where overseas investors are looking at our companies, and there have been some success stories around that.
Among the advantages that Sri Lanka has is that we have a politically neutral regime, in the sense that we have very good relationships with our neighbors, India, Pakistan, and the rest of the South Asian and the Asian region, and also well-established 150-year-old banking industry. So how would you rate Sri Lanka as an international or even a regional investment sector? Right.
So while we have the building blocks in place and the heritage, fintech is a very fast-moving industry, and scale also matters. So just like you would have been hearing about how our banks need to increase their regulatory capital, allow increase in single shareholder limits, similarly in the fintech space also too, unless we're looking at incubating an idea here and then taking it outside, within Sri Lanka we have the scale to consider. So our neighbor India is massive in comparison, and I mean if we can take our software there, then it's a different ball game.
So let's look at everybody's role model, Singapore. Now, what it has is a stable political structure, it has parliamentary democracy, it is a strong regulatory environment, and very good governance practices in place. The ideal utopia for us. But when it comes to Sri Lanka, are foreign investors actually looking at Sri Lanka from a good governance perspective, or is it just a quick return on investment?
I think if I speak specifically about fintech, it is an ideal environment to prototype, take concepts, build upon them, prototype them, try them in a market that is of a manageable size but may not give you the big returns. And then when it's more mature, you take it out to the bigger markets. If you tried that same thing in Singapore, I mean, unless you're in some kind of regulatory sandbox, which is a concept that's also out there, it can be tricky because the whole world is watching Singapore. So if your company makes a false step there, you might as well forget about it. And I mean, this has happened 20 years ago, even if you take the telco space. I mean, our mobile operators in their early days were able to really try out new things here before they tried them out in any of the regional countries. And these are, I'm talking of the days of like, Suntel and, the really early times.
Dinesh, do you believe that the fundamentals are in place to ensure growth of the economy and also sustainable development?
Right. So I think for us as companies or investors who look at us as potential investments, there needs to be a consistency in policies. So if I take, say, on the financial side, I mean, take the tax regulations. I know that the recent changes to the capital gains tax has some concerns. Then even if you take the higher tax brackets that have been put into place, I mean, if we are to attract overseas talent in here and get Sri Lankans who are working overseas to return and bring their years of experience and maybe contacts and develop products out of Sri Lanka, they have to feel that they're able to retain a good chunk of their earnings. So that I think things like that, as well as even if you take the gap sometimes between policy and execution, and things like ability to use the cloud. I mean, everywhere around the world, including European banks, are using the cloud for cutting costs, increasing efficiency, rapid time to market. And here, there's still a debate about it, or it may be approved by policy, but not sanctioned in the field. So you get cloud. The other area would be even outsourcing. There are regulations that stipulate how you can do outsourcing, but if you actually do it, you find that you get far more hurdles to overcome, or even exchange control. I mean, when you work in technology, while you may build and value add here, just like in the apparel industry, I mean, there's raw material or other kinds of software that you have to import. And doing that, actually the paperwork that I have to go through this year is more than the paperwork I went through last year. So, I find it surprising.
Yeah, speaking of outsourcing, the BOI is encouraging reinvestment in BPOs, also in manufacturing, IT, tourism, and also there's talk of Chinese investment in agriculture.
Okay.
Lots of areas that they're looking at. But are investments sufficiently focused and encouraged on the important development areas?
I feel that we should try and marry the different specialities that we are already known for in Sri Lanka. So if you take fintech alone, like you said, Singapore might be a difficult competitor. But if you marry, say, apparel technology, where we are also quite famous, with fintech, and bring up a very specialized vertical, then we can be a leader. So I think going too broad and having too many targets in mind is a bit difficult, and even a foreign investor will also wonder where should they put their money, right?
So we may be spreading ourselves a little too thin there.
Right.
So we'll get back to this discussion, Dinesh, after our break.
Sure.
So coming up after the break, we asked Dinesh to give us a little more insight on the tax structure he was talking about a little while ago, the main challenges facing the financial sector, and also the opportunities in the fintech sector in which he is in. Stay with us.
When we entered the industry in 1995, a new star was born as a fully owned subsidiary of People's Bank. For those seeking to grow their businesses, PLC provided the seed. We are not only Sri Lanka's #1 leasing company, but also the largest non-banking financial institution. Welcome to a new dawn for the nation. Introducing People's Leasing and Finance, PLC.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal, LMD Podcast, now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
$8,500 done. 1,500 go. Hoorah!
What on earth are you doing?
I'm making money.
You're crazy.
Crazy for money. 10,000 steps done. Who the man? I do it every single day. Show me the money.
So you run 10,000 steps every day, huh? You must be fit.
Some days I do 20,000. Hoorah!
You're with Benchmark, and we are discussing Sri Lanka's investment climate with Dinesh Fernandopulle, the MD and CEO of Synapsis. Dinesh, you gave us a little bit of a insight into the tax structure, basically what you're going through at this point of time. So, do you think this prevailing tax structure is actually working?
I mean, it's pretty early to judge that because I think it only came into effect a month ago, or even perhaps last month. But I mean, there are certain things, even where we take bilateral tax between other countries. Now, I think we have tax treaties with all the big, advanced economies, probably where we export our manufactured goods to. In tech, I mean, other than for some of the big people like the, MIT, London Stock Exchange Group, or Virtusa, most of our other companies' market is more the emerging markets, or perhaps what they call the frontier markets, even prior to emerging stage. So we actually don't have some of those bilateral tax agreements in place, and it would be nice, to have those, because otherwise our companies operate in an kind of a region of uncertainty, and we spend a lot of money on lawyers and tax consultants, and sometimes still get surprised by a requirement. And then that makes it difficult for us to price our products or services, how we remunerate our people who work on the projects. So there's an impact of having clarity in the tax structure as well as consistency.
So Dinesh, with some of the experience you have had in the financial services area, what are the challenges that the financial community faces when you look at overall investment?
So if you look at our financial sector, I think something that's been talked about a lot is mergers and consolidation, because our banks need to be stronger and bigger, except for a few, where foreign banks are also allowed to compete in our country. Also, if we want to become bigger as an industry, just like the banks in Malaysia or Thailand or Pakistan, and I'm only referring to regional players, they're all expanding at least regionally, and so we should probably have the capacity to do that, both from institutional capacity as well as a financial capacity. Then from our own technology investment, because rightly or wrongly, banking is quite technology intensive, and banks have traditionally been kind of forerunners in that space, although in more recent years telcos and even the apparel industry have made leapfrogs. So there, sometimes what we find is our local IT companies also don't have the scale to provide the services and products that these banks now need. So we as banks are compelled to seek resources from outside the country, and that's expensive, and you don't get the same real-time level of support that you can get from a company that's local. So I mean, I've faced this issue from both sides because I run the fintech subsidiary of DFCC Bank now, but prior to that I was running IT for DFCC Bank. So it hurts both ways.
You see, quite a bit of the financial services sector platform is now reliant on IT. Given all that, do you think the investor is guaranteed of some kind of investor protection? And given that, because weak controls and sort of ambiguous regulation can give them a little bit of, or they will take a step back and go somewhere else. So do you think an investor is given enough investment protection?
I think if an investor is investing into a company that is then a service provider to the banking industry, that vertical is relatively safe because, like you would remember from the financial crisis in the US or Europe, I mean, banks are considered important to the economy, and so it is very unlikely that a bank will suddenly abandon a platform or even allow, just like governments don't allow banks to fail, banks don't like their service providers to fail. So in that situation, it is a little bit of a safer place to invest. But in the general investment climate, even in tech in Sri Lanka, those variations in policy will give investors a second thought.
Getting back to your area of expertise, what are the opportunities that are there for fintech companies?
Okay, so I mean, right now, if even inside fintech or outside, I think you would have heard about blockchain, you would have heard about AI and machine learning. I think those areas have a lot of opportunity, and if we can pioneer them here, or maybe pioneering is a bit of a strong word because it's already out there, but if we can get practical use cases, and then we can take those projects outside as well, that would make a lot of sense. Because again, if I talk about the apparel industry or the agri industry or the fintech industry, all of us can use blockchain because if you think of some product, be it a share, in the capital markets in finance, or a garment from our factory, or organic mango from a farm. I mean, this can be tracked all the way through the exporter, the shipper, the wholesaler in the consuming country, and the retailers. So that's something, or you would like to know where this share moved during its lifetime. So those are practical applications of blockchain, and if we can marry a couple of compatible industries together and give a really practical, useful example of this technology rather than technology for the sake of technology, that would make sense.
As a final question, Dinesh, what can we realistically expect in terms of Sri Lanka's investment prospects, given that we have a considerable amount of Chinese investment in here, plus there are clouds hanging, One Belt, One Road initiative. But with all that, what can our realistic expectations be?
I mean, I think being involved with China at this stage is probably a good thing, because if you take the investment into whether it be supply chain and logistics, which is what the Belt and Road Initiative is about, or financial sector, everyone's heard of Alibaba, and Alibaba has Alipay, which and then Ant Financial, which has a banking license, and pretty big in the US already. So when the Chinese government puts focus on an initiative, they put the money behind it as well as they put the regulatory structure behind it, and it's a very decisive movement. So I think being related to that in some way, or at least being able to benefit from it, is very good.
Right, so that sort of concludes our interview with you, Dinesh. Thank you so much for taking your time and coming here to our studios.
Thank you very much, Savitri.
We've been discussing Sri Lanka's investment climate with the MD and CEO of Synapsis, Dinesh Fernandopulle. On the other side, we have Anushan Selvarajan with more.
Sri Lanka's #1 leasing company is now the nation's largest and highest rated finance company with 2 international ratings. Let us move the nation as one with People's Leasing and Finance PLC.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal, LMD Podcast, now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
Done. 1,500 to go. Hoorah!
What on earth are you doing?
I'm making money.
You're crazy.
Crazy for money. 10,000 steps done. Who the man? I do it every single day. Show me the money.
So you run 10,000 steps every day, huh? You must be fit.
Some days I do 20,000. Hoorah!
Welcome back to the show. I'm Anushan Selvarajan. Now for a closer look at the latest on the boards. Joining me is market analyst and LMD columnist Hasta Premaratnam. Welcome back to the show, Hasta. Now, the ASPI somewhat reached a middle ground, so to speak, compared to the losses, the drops that we had before. What are the reasons behind this? Is it better confidence from our investors or better policies being implemented? What is it?
Yeah, I think we've seen the market being quite volatile since the February elections. Before that, we saw some stability coming through, and then index reaching close to 6,600 levels, and then thereafter we saw some drop in the index gradually going down to early this month, and thereafter we've seen some pickup thereafter. Obviously the investors have weathered the storm of uncertainty that prevailed in the country in the political front, and then looking at more sort of building things up from here. One of the key things that have come out is that the first quarter corporate earnings, when I say first quarter calendar year 2018, corporate earnings have been stronger than expected, which clearly indicates that the economy should be performing better than last year, and there will be much better performance when it comes to the rest of the year as well. So on the other hand, we are also seeing the normally month of May is seen as a bad month from a weather perspective. It has been bad, but not as bad as the last few years. So hopefully the agriculture sector, which normally is very vulnerable with the weather patterns, will not get impacted so much as last year, this year. So in that context, I think there is hope at the moment that there will be better economic growth and the corporate earnings to grow at a sustainable level this year. So this prompts better valuations in the market, and investors have been gradually setting in. So as usual, foreigners have been in the lead front to accumulate fundamentally sound counters, but parallel to that we have also seen the retail investors coming into the party, and there have been some buying which have been particularly around the fundamentally sound counters.
Now you mentioned the local investors also jumping in, but has it been just the same amount of people, or has that number of investors per se expanded?
It's mostly the same people, but I think in the last few months or the last
year also we have seen relatively a higher participation from the foreign side than the domestic investors. When you say the domestic investors, even the domestic institutions are still silent. The government institutions like EPF, ETF, NSB, Bank of Ceylon, People's Bank, even SLIC to a good extent have played a kind of a second fiddle to the foreign investors and also to the retail investors because of multiple reasons that have been going through in their internal matters. But the retail side, which have been relatively silent, have picked up. Again, it's not necessarily new retail investors per se, but some of the investors who have been sort of watching the market for a long time, and now with the index coming to the right level, prices coming to the right level, they have been interest to pick up.
So our currency then, how is that performing right now?
The depreciation has been primarily driven by the global sentiments, where we've seen the US dollar appreciating against almost all the key currencies in this region. In fact, Indian rupee, Sri Lankan rupee, or even the euro for that matter, all the currencies have depreciated against the dollar because the dollar strengthened in the back of the oil price increases as well as more the political developments around US and rest of the world. But I think when you look at the bigger picture for Sri Lanka, the exports have seen growth last year and expected to continue that momentum this year as well. Only negative impact that we've seen so far is from the oil perspective, because oil prices have risen at the Brent level, going up to close to almost $80, which was a bit unexpected, but certainly the upward trend was expected to a good extent. So oil prices did have an impact. Obviously that will increase the imports and have an impact on the widening trade deficit. Remittances, on the other hand, which was coming down last year, have actually seen a positive movement, which is a good sign for this year. And the tourism related income also has been on a more growing mode. So when you look at the overall balance of payments and the rest of the service income in the foreign account, fundamentally I don't see that there is a reason for us to expect the rupee to depreciate significantly.
Thank you for joining us, Hasita.
Thank you.
That was market analyst and LME columnist Hasita Premratna. We'll be right back after a short commercial break. Stay tuned.
When we entered the industry in 1995, a new star was born as a fully owned subsidiary of People's Bank. For those seeking to grow their businesses, PLC provided the seed. We are not only Sri Lanka's #1 leasing company, but also the largest non-banking financial institution. Welcome to a new dawn for the nation. Introducing People's Leasing and Finance, PLC.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal, LMD Podcast, now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
Sri Lanka's #1 leasing company is now the nation's largest and highest rated finance company with 2 international ratings. Let us move the nation as one with People's Leasing and Finance PLC.
Welcome back to Benchmark. I'm Anshul Sararaja. A new fuel pricing formula was introduced into the country. Just to shed some light on this, we have invited into our studios product lead from Frontier Research, Nirupti Karyavasam, who recently conducted a study on fuel pricing formulas. Welcome to the show, Nirupti. Now, to start off with, how important is it to have a fuel pricing formula?
So if you look at the international market, the oil prices are on the rise. In fact, it has hit the $70 benchmark, and basically global analysts are expecting it to continue to rise. And meanwhile, in Sri Lanka, we haven't seen any fuel price increase since 2015 until we had that 2 weeks ago, the price increase. So basically, I would say it's very important that we have a fuel price revision and also a particular formula that would determine exactly how the pricing would be determined.
Now, the study that Frontier Research did on fuel pricing formulas, which granted was done prior to it being implemented right now here in Sri Lanka, you all say that subsidies are not a good thing. Could you just elaborate on this?
So basically, having these prices continuously subsidized has mainly impacted our external balance. For example, if you take in last year, 2017, our fuel bill increased by 40%. So this was close to around 1 billion increase. And at the same time, if you look at the trade deficit, that has also increased by 800 million. So basically, had these prices been increased, the fuel price increased in Sri Lanka, the consumers would have basically adjusted to these prices, and the requirement to import so much would have been reduced, and thereby the trade deficit would have reduced as well. So this is just on the external sector, but if you also look at what the impact has had on the fiscal side, the subsidy cost that the government has to bear, that is also rather large. In fact, what has happened in Sri Lanka is, unlike it actually happens in many countries as well, that these bills that are these subsidies, that its costs are mainly borne by the particular state-owned enterprise. In our case, it would be the CPC, Ceylon Petroleum Corporation. I think I recently read that Ceylon Petroleum Corporation is they're also already in huge debt. The government owes nearly 320 billion to CPC itself. So that's a huge cost that the CPC has to bear. And how are these funded? Through mainly loans. And most of these are foreign loans. So it just keeps on adding to our external debt as well. So these are just two main macroeconomic instabilities that are caused by these distortions.
Now, fuel pricing formulas were bought originally way back in 2002, but why was it not continued beyond that?
So one of the biggest reasons was that even though this fuel pricing formula was implemented, it was not done in an efficient manner. The government did go for price revisions, but they did not do it in a sufficient manner. So in 2000, 2003, 2002, 2003, the fuel prices in the international market were much lower. So therefore, the pass-throughs, or in other words, the burden that the government gave, or the reduction in the subsidy that was done by the government, were very minimal. And therefore, the adjustment that happened was not so much. But by end of 2003, these prices started going up at a rapid pace in the global market. So by that time, the government has not given enough sufficient increases in the prices. So they had to go for huge increases. And the entire thing was blamed on the fuel pricing formula. This was also the time when there was elections coming up. And so it was a very frequent and a very favorite topic of the opposition to go into protest. And that's how this basically had to come to a halt.
Now, Nirupti, have the positive aspects of a fuel pricing formula been conveyed to the general population?
That's a very good question. It's something that the public is not very well aware of, especially if you look at these protests, most of them done. Half of them, I guess, most of them, are politically driven, and most of them are not very well informed. They're mostly saying that these price increases are unjustified or unfair. But this is again something that the government has to answer, because when they reduced the prices in 2015, it was a move purely to reinforce the public that they have chosen right, that they've done the correct decision of choosing the new government. But now when the prices are increased and when they point at the market changes, that's something the public will not understand. So I guess it's all about how the government will be able to convince the public. And I do not think they have done it properly, or at least the opposition or the other political leaders are doing a better job at conveying the public otherwise.
Thank you for joining us, Nirupti. That is product lead from Frontier Research, Nirupti Karevasan. Thank you for watching Benchmark, and we hope to see you again next time.